Hello, traders. Gary Wagner with the Gold Forecast here. It is Monday, the 4th day of April, approximately 9:30 a.m. in Honolulu, Hawaii, and this is the Daily Report. Gold is trading higher this morning, currently trading 1433 and change. It has been as high as 1440. We are looking at our daily Henkin chart right now, and as you can see, in terms of today's candle, it is still off of the high. So we've got a smaller body candle. The one thing that I am noticing in terms of a bullish stance is the absence of this lower wick. However, I would like to see this body size a little bit larger. It would give me a little bit more confidence in this sustained rally. After hitting that 1440, of course, it did back off. But traders, here's the key, and here's what we're looking at. This market has been fighting with moving into record highs. We've got silver at 31-year highs. We've got gold trading at record highs, just off the record highs. Record high would be this right in here, which was 1447. We are absolutely forming a base down below 1410, and the market is moving higher. Now, in terms of fundamental news, we had crude oil hitting $108 a barrel plus, and this in and of itself is such an indicator of inflation because so much of our economy is oil driven and oil based, so that rises in oil are going to affect everything across the board. Traders, we are looking at a daily chart. This is the daily chart in which we use for our channel lines as well as our Elliott wave. It's currently my belief that when we hit this last top here, we entered our corrective phase, corrective wave 1. I also believe that this current wave that we are in, which is wave number 3, is a complex wave, and that's going to either be a 3 or 5 count. We have 1, 2, and we are currently in our third component of this wave 3. Because of the range that it's trading at, my belief at this point is we're probably going to see a 5 count in terms of this wave structure itself. In terms of where I'm looking for placement in terms of this next wave, I'm going to look at this upper channel line right in here, so that somewhere around, say, 1460, if we start taking out these highs, we get a nice move. I would look for some resistance really right in this point right in here. In other words, my belief is that it will probably trade to this upper part of this channel line and then go into, because it's a complex wave, into 4, which could be like that or could be like that, and then 5 should propel us to about the 1500 point, anywhere between 1480 and 1500. That's my belief at this point. Now, one of the things I want to do is a simple Elliott wave extension in which we go from our low, we're going to take that to our high here, and then we're going to look to extend that in terms of where we think the market could go and different relationships. What we can see here in terms of, let me darken that up for us, traders. So as you can see, by using our Fibonacci extensions, it's showing us different target areas. Now, you notice that the one target area I was looking for was around 1460. In terms of full length of this wave, the most logical points are going to be the 38% level, that's 1496, and that roughly falls within my target of 1508. The 23% level is 1476. And then the 50% level is going to be 1511. Should we be fortunate enough and we see this market continue to move up, my sentiment is that these are going to be critical areas that we run into that will form some resistance. Realize when we start to trade again at record highs, we don't have typical techniques that we use to plot resistance. We've never been there before. If we haven't gone there, it's very, very difficult to say that we're going to find resistance. Of course, the psychological levels, the 1500, 1400, 1600, those are always going to be resistance and support targets. However, Once we get into these uncharted territories, as we have been flirting with over the last couple of weeks, we're going to have to make pretty extensive use of Fibonacci extensions to give us an idea of where we think this market's going to go. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily review. Bye-bye.
When I look out my window, many sights to see. And when I look in my